Kevin Kerr of Global Commodities Alert.
There's not much he doesn't know about commodities.
So the energy markets are always changing. We talk with people from all over the markets, from wellhead to burner tip, as they say in the industry. We cover everything from transport and pipelines and all kinds of other areas in the energy industry that you don't even think of. Hi, I'm Kevin Kerr for Pipeline of Profits, and this is Phil Flynn from Price Futures Group. Phil, good to have you here.
Hey, Kevin, great to be here.
So let's get right into it. Let's talk about oil prices and how far they've slipped and why.
Well, they've fallen mainly for two reasons. Number one, the U.S. shale revolution, and number two, the OPEC price war. I mean, make no doubt about it. Saudi Arabia has declared war on the U.S. energy producer, and that's why prices are falling. You know, I kind of make it, that last OPEC meeting, it was kind of like the sneak attack at Pearl Harbor. You know, everybody thought that they would cut production. They decided not to. And so they've got a target on U.S. shale production, and so far they're having some early successes.
But these low prices have got to be hurting OPEC too. How low can they let it go?
You know, I think the question is, how low can Saudi Arabia let it go? You know, I think they've convinced the other producers, listen, we're going to drive these prices lower. And I think they tried to convince even the weak-handed members of the OPEC cartel. It's like, guys, even if we cut production, it doesn't matter. You know, the U.S. shale producer is going to fill that void. You know, so we've got to nip this in the bud now. We've got to do what it takes to knock these guys out of business or slow them down. Otherwise, we're done as, you know, a major power in the U.S. Or the global energy markets.
But isn't it true that the Saudis are really the ones with the spare capacity, the ones that have the deep pockets, maybe the UAE and some other areas in the OPEC, but other countries like Iran and Venezuela, these countries are really suffering with these prices at these levels? Well,
they're going to suffer even more because unless, you know, the Saudis decide to end the price war, it's going to continue. So I think that's why they, at the last OPEC meeting, they all said, hey, we're on board with this, because they didn't have a choice. They're going to live together, they're going to die together, you know, and if a few countries fall by the wayside, as far as the Saudis are concerned, as long as they can maintain their market share and their sway in the global energy space, they think it's a war worth fighting.
Clear up something for me. Now, production costs here in the U.S. for shale is quite high, right?
Well,
what do you estimate that?
It's all over the board. It depends on where you're drilling, you know, how you're capitalized. You know, I've seen some reports that you can produce shale under $40 a barrel and be profitable. Other areas, of course, it's much higher. So it really depends on how you set it up. You know, I think the key thing is that when you look at what's happened here, the winners and losers are the guys that have hedged their production.
Right.
Obviously, if you're producing a shale well and you've got a hedge on, you don't care if it goes to 20, you'll continue to produce. If you don't have a hedge, you're going to be in big trouble, and that's pretty much where we're at. I think the bigger question is that can OPEC bury the U.S. shale producer like they did, you know, the Texas oil producers back in the 1980s, the last time they had a price war. And even though early on it looks like they're kind of winning some of these battles, I think over the long run it's going to be a much tougher war for OPEC to win, you know, because production is so much cheaper, it's so much more responsive, and so I think even though it looks like OPEC has shaken up the energy world with this price war, I think it's a war they're going to lose over the long run.
Well, it already seems to be succeeding a little bit. We're seeing rig counts down. We're seeing some projects, pipeline projects getting shuttered in the Ukraine and also here in the States.
Right.
So OPEC is having some impact on it. But longer term, do you think that OPEC will survive as a body if this goes on for very long?
I wrote an article 6 months ago, OPEC rest in peace. You know, I mean, it's the end of the cartels. We know it. I mean, the cartel is going to have to adjust, and I think one of the ways that they're trying to adjust is by starting this price war to remain relevant. But these weaker members of the cartel are going to have a much difficult time, you know, being pushed around by Saudi Arabia. If Saudi Arabia fails to knock out the U.S. shale producer, I think it's the end of the cartel, because the cheaper producers are saying, why did you get us into this war, this price war? You didn't bury the U.S. shale producers, you buried us, and that's where you're going to have a big problem down the road.
Right. So countries like Iran, these countries are really struggling to meet what the barrel provides for them.
Yeah.
I mean, clearly in Saudi Arabia it's around $86, I think, is what the value of the barrel is just to cover the government expenses.
Yeah,
so,
funny quote from Iran, they were saying, I think this is a political conspiracy. I'm like, no kidding, it is.
So
Maybe not against you.
There's a lot of politics going on. I mean, from
yeah.
Russia all the way to Iran and Syria and everything else. So
well,
it's not just about the shale, is it?
No, it isn't about the shale. I mean, a lot of people thought that the reason why the Saudis were doing this was Russia. You know, they don't like the Russians. The Russians are
they're our friends, Phil. They're helping us.
There you go. I know. That's what I'm saying. Well, that's 1980s. thought. No, I'm just kidding. But essentially, you're right. I mean, the Russians right now are going to take a lot of heat, but I don't think the Saudis look at that. Hey, listen, if they're collateral damage, that's fine. But I think if you look at their real target, it's the U.S. shale producers. That's the biggest threat to the cartel and their existence.
Well, I read somewhere we got about 21.5 billion barrels of shale that could be harvested, and so that's got to be sending a shot over their bow for the long term. If we get that production ramped up and going and the proper infrastructure, that we will have energy independence. But doesn't all that come to a grinding halt with prices down this low?
I don't think it comes to a grinding halt, but I think it's definitely delayed. And I think that we're going to see some damage because of what OPEC's done. Listen, Kevin, I don't care if prices go up to $150 a barrel, if they go down to $20 a barrel. If it happens because of normal supply and demand fundamentals, there's going to be winners, there's going to be losers, but both buyers and sellers can adjust. What I don't like is the fact that what OPEC is doing now by trying to manipulate the market, by overproducing oil on purpose just to drive oil prices down. That's where the pain is going to be felt. That's why we're seeing job layoffs in the energy industry. That's why these are going to be put down. But we're also laying the groundwork for the price spike in the future. You know, when the economy starts going back, all the projects that normally would have been built aren't going to be built. You know, so OPEC once again is harming the global economy. You know, OPEC and Saudi Arabia hasn't done us any favors. During the economic slowdown in 2008, when everybody was stimulating the economy, trying to get the economy going, what did OPEC do? They cut production to try to slowly, raise prices for their own things. Now the world's fighting off deflation. What do? Add to it by sinking the oil price.
Yeah. So now, our relationship with countries like Nigeria, as far as I've read and as far as I know, we have not imported Nigerian oil for a while now, and they're struggling. So we've been getting away from those countries that are what I call choke points.
Right.
But now, when production slows down here, as it certainly will, and I agree with you, I think oil prices will climb again. When that scenario takes place and we turn back to our old suppliers like Nigeria, and they say, see ya, we're doing business with China.
Right. Well, so, I mean, I'm not so worried about that because I so much believe in the shale revolution. We don't really need them anymore. Right. And if prices go back up, the shale production is going to come back online. But what I do worry about is the global instability that's being caused by these prices. I mean, Nigeria has an oil strike. There's continuing violence. You look at the Arab Spring. These low oil prices are going to probably stimulate more unrest in the region. So that's the scary part of the sell-off in the oil price. But I'm not too worried about, if over time these oil-producing countries should adjust to the new dynamic, and if OPEC didn't destroy this by trying to drive down prices, overall it would have set the stage for a demand boom down the road.
Right.
But I think OPEC is destroying that by trying to manipulate the market by unnatural forces.
Yeah, I agree with that. I don't like market manipulation either. It's the natural forces of the market that we like to see moving. It's a little scary time right now.
It is.
Let's switch gears for a second and talk about China. China and Russia are building this relationship, albeit away from the United States.
Right.
The United States and Russia are not getting along at the moment. So where does that relationship go? Do you think that Russia and China are going to develop a new petrocurrency such as a yuan, ruble/gold-based currency to trade rather than the dollar?
I don't think so.
No.
Every time we hear about that, their currency crashes. Every time they're talking about a petrocurrency, I remember, wasn't it? I think the other thing was a few years ago that supermodel, what's her name, Giselle, wanted to be paid in euros. Right. That was the sign the top was it. The euro got crushed after that. And then of course Saddam Hussein, he wanted to be paid in euros for the oil. Every time we start talking about that, the reality of the situation is it's a lot harder for the globe to get off oil. There is going to be a new Chinese petrocurrency, and it may make trade easier, between Russia and China. They're going to be trading their own futures contract in China. But at the end of the day, it's still going to be pegged to the dollar. Right. So the dollar at the end of the day is still going to be
present.
That's right.
So let's switch gears one last time to natural gas.
Yes.
How does all this affect natural gas when the two are really not connected, crude and natural gas, but natural gas prices are affected too, aren't they?
Well, they are. They've been getting slammed because of the price of oil, and they shouldn't be. I don't think OPEC is flooding the world with natural gas, as far as I know. And so I think, when we talk about the drop in rig counts, I know natural gas rig counts went up a little bit, but the drop in the oil rig counts, the residual gas production isn't going to be there.
Let me ask you something.
Yeah.
A lot of these companies just burn off that gas, too.
Well, there is. I mean, listen, we still have some big infrastructure issues. We're not taking full advantage of our natural gas revolution, and that's not going to change in the short term, until we start building some pipelines. And we can't even get a pipeline built from Canada, for heaven's sakes, for the last 3 years. So it's going to take time and investment. But I think the bigger issue is, hey, we're talking about natural gas. Supplies are 9.5% below the 5-year average. We're ahead of winter, and prices are falling because oil is falling. There should be some kind of disconnect. And if production slows because oil prices are driving down natural gas prices, that could present the possibility of a major price spike, say January and February, when prices get cold. Because we're not producing natural gas because of natural gas fundamentals, it's because of oil fundamentals, and that'll come back maybe to bite us later in the winter.
I'm just curious, but a lot of people who say heating oil, or factories in the Midwest that use heating oil, or oil-based manufacturing, they can't switch to natural gas, can they, very easily, or some can and some can't?
A lot of the switching that could have been done has been done
already
to natural
done.
gas. Yeah, I mean, over the years. I mean, there's still some companies that can flip back and forth, and it really hasn't been, advantageous. As you know, a few years ago, that was a big deal. They'd be looking at the price, say, "Oh my gosh, here, let's switch to natural gas. Oh, back to heating oil." But that's not happening anymore. There's been such a price discrepancy. Most traders are in for gas for the long run. And if you are burning gas, of course, the EPA likes you a little bit more because your emissions are a little less. So you've got a double whammy reason to keep doing it. Right, exactly. Keep them off your back.
You have a new report out on natural gas?
Well, not new. We've been talking about natural gas for a day. We do my daily energy report that we put out to everybody right now, and but we are very bullish on natural gas for the long run. I think natural gas, if you can look at the big picture, get beyond the short-term bearish fundamentals, really is kind of like trading oil when it was $25 and $30 a barrel. 5 to 10 years down the road, when we have to be more clean, more green, the best replacement is going to be natural gas. You're going to be seeing natural gas cars, natural gas factories, natural gas everything.
Do you see a realistic future for LNG?
Oh yeah, I think it's coming. I mean, look at the price discrepancies that we've had in recent winters, with Asia and China. Look at the tensions between the Ukraine and Russia when it comes to gas. So I think there's going to be a viable market.
Theoretically, America could really become a net exporter eventually.
Oh, I think they are. Yeah, I think they will be. Absolutely, and I think they're pretty close to that now, believe it or not. We're sending a lot to Mexico. So
it's still quite expensive though, isn't it?
Well, the LNG is, but so was a lot of projects years ago. I think as demand continues to grow globally.
As technology
goes, I think that LNG is going to be very viable in the future.
Very interesting, Phil.
Energy
markets are always changing, aren't they? Now,
they are.
You work with all different types of clients at Price Futures Group.
Yeah, we do. I mean, Price Futures, we have everything from asset management, the Price Group. I don't know, I'm sure you've heard of Jim Rogers, the Rogers Commodity Index Fund. Price manages that entire fund for him. So we have a lot of different assets at the firm, so it's a very exciting place to be.
Now, where can people find you?
Well, they can find me right now in the studio. In Chicago, on the street, on the train. But the best place probably is to email me at pflynn@pricegroup.com. That's pflynn@pricegroup.com. I thought you were going to say you'd see me at the bar on Fridays, but that's also a good spot. And then, of course, you can always give me a call at 888-264-5665.
Well, great, Phil. Thanks for coming in today and for talking with us. I'm Kevin Kerr for Pipeline of Profits here on MeetAdvisors.com. Thanks for watching.